we finally have some Riocan news. And if you are not part of the Rio clan, let me step back and update you just a little bit, as this is one of the largest holdings in my six-figure dividend stock portfolio. I currently have roughly 1,550 shares, cropping out a massive 10% dividend yield that I currently have set up on a drip, which I was fortunate enough to receive about 8 shares for this month. And we're going to take a listen from the Sonshine, the CEO of this real estate investment trust. But before we do, to get his opinion on where the company stands today, and more exciting news, guys, they're going to be doing some share rebuybacks. So pursuant to the notice, Riocan is authorized to acquire up to a maximum of 31,615,000 of its units, or approximately 10% of the public float. And what makes me feel even more better as a shareholder, and I'm sure many of you can agree to this, Riocan believes that the purchase of its units may represent an investment opportunity for the trust and an appropriate and desirable use of its funds based on the current market conditions. This is one of those stocks that I think is going to be an incredible recovery play. And in these current economic situations, when you have companies like the banks that are no longer allowed to do share buybacks or dividend increases, when you have airlines with CEOs cutting their salaries, and companies especially like Carnival Cruise that are basically diluting shareholders to raise capital to avoid bankruptcy, this is some stupid good news coming out of a real estate investment trust. So what we're going to do is we're going to listen to the CEO, Sonshine himself, to see what he thinks of the company today, and then I'm going to offer you my humble opinion at the end. Consider hitting that like button, and let's jump on rabbits.
That is good to hear. In a big picture, Ed, where are you with your rent collection at the moment?
Well, you know what? We haven't really changed. It's been good. I can't get too specific because we're going to release our numbers in about 2 weeks at the end of this month, I think. But I had said, I think the last time I talked about this, that we're better than 90% collections. That is and seems to continue to be the case.
You do have a number of businesses as tenants that now face new rollbacks in some key areas, restaurants, gyms. Those are tenants of yours. What do you think is the expectation? And I mean, I guess it comes in tandem with the changes on rent relief, but what will happen to those tenants? What are you hearing from them?
Well, you know, a lot of it depends, and of course cinemas is in that group as well. A lot of it depends on how long this lockdown lasts. I mean, the biggest problem we all in business have, everybody, is uncertainty coupled with anxiety. And that's what everybody's feeling these days. But the fact is, if you're a mandated to close tenant and you qualify, and there's still some uncertainty as to who can qualify, I think my understanding, and that's just gossip, is that the government is going to be a little more expanding the who qualifies. You can actually, if you're mandated close, you can actually recover 90% of your rent, assuming you qualify, which is a very good change, and where the government has attempted to address these what may be rolling closed outs. You know,
you mentioned movie theaters. Cineplex, which is obviously the primary player in this space, responded to these rollbacks by saying, we worked really hard, and our staff has worked really hard to make sure that we do not spread COVID. That's not reflected here. Do you think the government, it was still a bit of a blunt instrument, as much as they're trying to be more surgical here, that there are businesses being caught up that should have been given a better pass?
And there's no question of that in my mind. I think part of the problem is that the testing regime and the contact tracing regime, if you will, has not been up to snuff. It's very hard. I'm not being critical of the government, because we're all in a brand new world and doing things we've never had to do. So it's understandable that things are going to take time to catch up. But I do know that a lot of our restaurant tenants have not only spent a lot of money in putting in plexiglass and buying PPE for their staff, and the theaters have they've retained consultants and really spent a lot of money and gone way out of their way. And now both in dining, and the same with gyms, dining, gyms, and cinemas have been closed down. I haven't seen any evidence that there's been a lot of cases coming out of any of those three things. So I think it's a blunt instrument. I think Premier Ford, to his credit, resisted it for as long as he could, for exactly the reason I'm saying, that I don't think there's evidence.
We also know, Ed, that some of your big tenants, and I'm thinking of less retailers and more those big tenants like RBC or BMO that use big corporate space, may well be rethinking what they need in future, but that they may be in leases right now that are kind of holding your income steady. Do you worry about kind of future rollover cliffs as their leases come up, or whatever the terms are, that where they opt out of those spaces?
I'm less worried about office space than perhaps many others. I'm sitting in my office right now as I speak to you, and the reason I do that is I personally I'm a lot more efficient when I come to the office. I think as people regain confidence in transit and elevators, and by the way, it may be a year from now before all of this happens, because you may need a vaccine and you may need this pandemic to be mostly gone, if not all gone, before that happens, but it will happen. Human nature and business culture and the maintenance of that culture, bringing new people into that culture, requires a physical space. I don't want to be a guy who sort of pounds the drum. We're not big office space owners. We do own some wonderful office buildings, like the one I'm sitting in at Young Eglinton Center. But people will come back to work eventually. The number of people who will be permitted to or want to work from home, it'll be more than there was a year ago, but a lot less, I believe, than everybody thinks there will be.
Ed, it's always great to get your view. Appreciate it.
Thank
Ed
you.
Sonshine is the CEO of Riocan REIT.
Well, welcome back, passive income investors alike. So after just listening to Ed Sonshine, I don't think I could have gotten a better report. Now, I'm really shocked that he was even stating how much rents they were generally collecting, because usually CEOs heading into an earnings season are very hesitant on releasing numbers, but they stated, heck, we're going to be collecting more than 90% of our rents, and it seems to be that way moving forward, even with the destruction of the theaters right now, the gyms, and of course I imagine some of the restaurants. But I'm hoping, considering some of the restaurants are like Swiss Chalet and stuff, they generally still do drive-thrus. But either way, this always takes a lot of the anxiety off my back, is a lot of people have been looking at Riocan stock and seeing it still trend sideways and sometimes even to the downside. A lot of people get uncomfortable with this, but they are still paying out their dividend. They got $80 million in cash and roughly $1 billion in credit, and I guess they just don't really know what to do, as they're sitting on their hands here with more income than they were probably expecting, and they're like, you know what? This is a good time to take some shares off the market, because my goodness, these are incredibly suppressed prices. And I'm really hoping that sometime in the near-term future, Riocan is going to be able to support and even cover part of my rent with the crazy huge yields that I am picking up today. And I just want to shout out Bloomberg here, BNN. They did a phenomenal job. They really asked the hard-hitting questions. They're not beating around the bush at all. And luckily, with the professionalism from Ed Sonshine being in the industry for like 20 or 30 years, I don't think I could feel any better from management, tenant basis, and it's making me really look forward to the next earnings cycle that is coming up here, guys, on October 29th, 2020. So if you guys want to see me break down the earnings report at the end of this month, consider hitting that subscribe button. And of course, as always, I'd love to know what you think in that comment section below. So stay cool, stay awesome, and I look forward to chatting to you guys tomorrow.